Here's M30. Let's see, here we have rebalancing. Again, if we go to M15, here we will find more favorable rebalancing. Plus here we have gap rebalancing. Here we have gap rebalancing. This gap was rebalanced too. Again, rebalancing it all according to a certain methodology, which I have in my course. And now you understand that if we have upward movements there, you, again, using all your arsenal of tools, skills, and so on, predict and bet on the fact that we will have an upward movement there, then you realize that all the gaps that are at the bottom, that is, we have a breakdown, pullback, breakdown, pullback, breakdown, pullback. You realize that these gaps are all great entry points into the market. But again, profit, 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 if it's not profitable. If you do not understand what is going on, how to work with it, and what are the conditions in general, then you will get confused. For this, you need a certain system context, certain sets, certain factors. I mean, this thing that I showed you, it has both contextual and systemic elements. Up to this point, we've been talking more about contextual things, why, where, how it moves, what's rebalanced. This is already a huge clue to you as to what is going to happen. If you combine that with what you have already sharpened there, yes, within your systems, you're going to be a very good trader. Much, much better than you traded before, just by following these rules from this video. Again, you need to watch it a few times, write out the key elements, and look at the charts. And now we are going to talk about tactical elements, how we can capitalize on these or those gaps, how these system gaps contain clues on how to enter, potentially where the market will move. Let's say that the system contains the answers to how to enter and where to enter. That's simply due to the fact that there is an understanding of gaps. So friends, let's move on. And in the end, I want to talk to you about entry techniques that can be used to capitalize gaps and to capitalize any market movement. And I want to talk about it with you because, well, when a person has no understanding, no structure in his head, he starts to get very confused, to mix everything in one pile. It's not clear what is combined with what, and so on and so forth. Well, it turns out to be some kind of complete nonsense. So now I will say, of course, not all the options, but those that will be available to you, that will be clear to you. And in principle, well, it will be more or less enough at first. Well, it is not the whole range of gap capitalization, but it is enough. And the first one is unconfirmed gaps. Unconfirmed means that the price overlapped the gap and flew away. The price overlapped the gap and flew away. We are not looking for some combination within the junior timeframes breaking the structure. Now we're going to talk in more detail what that might be. And we're just seeing a rebalancing and a pullback. But this one here, or rather this one here, is rebalancing and moving. Yes, they're combined with the smart money element. By smart money element, I mean of blocks, that is order block, breaker block, rejection block, propulsion block. Well, that's the very base that I use, which is the easiest to discover and define. And when you realize that there's a gap and there's a smart money element, then this pattern in combination of a smart money element and a gap, it in itself contains a very high probability that you're moving correctly. In fact, this is a C-rep. This is a C-rep. And this is in the moment. After you move in the right direction. After you break the structure, it becomes a C-rep. Here, yes, you might think, well, here's also a breaker. But here there's no gap, and therefore it's not. Absolutely, it's gapped. That is, it's not given any support. And again, well, you have to take into account additional context. But your job is to look at these elements here. And now you are no longer a beginner. Yes, look, there is an order block. That is not an order block, the reason for moving somewhere, but exactly the gap and liquidity. The smart money element in the form of order block there, it provides resistance for further downward movement. This is an additional clue in the moment which you combine with what you have already learned. And you realize that if there's a gap to rebalance, and this is a C-rep, yes, then you understand that if it is rebalanced and there is also an order block, then the probability that it will provide support and the price will move somewhere there, well, is very high. You use this thing and use it without confirmation. The confirmation here is the smart money element in the form of some of the blocks. This is the first type of entry. So the next format of an unconfirmed gap, but which does not contain a smart money element in the form of any of the blocks. It's a move like this. There was a breakdown of the structure, but it was not the break of the structure that did it. There should be additional factors of your system. I have a lot of these factors in my indices to increase the probability. I understand what I see in front of me. How do I capitalize it? How do I capitalize it? Where does the price move? And so on and so forth. What are the additional confirmations? It's all in my index system. I teach in a private format. Again, if interested, come in for a free consultation. Link to the recording in the description of this video. And the point is that something in the market, besides gaps, should suggest to you a higher probability of moving somewhere. You should evaluate. I am not going to tell you what these elements can be. It should be your system or something else that you have learned. Some textual factors, it has to be a certain time, a certain day, but something has to speak to the momentum. That's very important. And when something speaks of momentum, then you can go in this kind of unconfirmed format. But let's say the minimum requirement that you can take now is a breakdown of the structure. If you see a breakdown of the structure, it already says something. Well, it's not such a breakdown of the structure that there was a downward movement and then in short, well, some larger scale, that in fact, it was a correction and now the impulse will begin. And you will still be wrong. That is some kind of localized movement within a certain period. If we go to the M30, here we have a breakdown of the structure, a pullback, again the structure failure, rollback, breakdown of the structure, rollback. And when there is a history like this, we have C-rep, except for M15. This is also a C-rep, but from the hour time frame. And you realize that the price is moving up. It breaks the structure of the pullback, well, breaks it up. It rolls back, rebalances. It makes no sense to move down. But there's an additional element of rejection block. Again, it breaks through rejection block, but there's an extra one here. In this particular section, there were additional factors on indices, which just inevitably indicated that there will be an impulsive, strong, powerful movement. And again, it is in favor of accumulation. But there were a lot of additional factors. But the farther you go, the worse the benefit. This very entry itself contains a clue about where the movement will be. If you see a breakaway that leaves behind inefficiency, then when you touch this inefficiency, when you rebalance it, it doesn't matter which one. I mean, it could be full, could be half, maybe just a touch. I mean, it's best not to be greedy, but it's got to be profitable. The price will fly away. And this is a combination of patterns. It's an entry technique in itself, which you can use. Unproven without the smart money element, this is probably the only way in which you can use this unconfirmed. You already know without that gap that the price is probably going to move up there. But if you still see the structure breakdown and the gap, it will be a super awesome trade. You can go in and capitalize on it, but if you put this entry technique as a determining one, like I see a gap, it's like a C-rep and the price will go up because of it. Well, you can be wrong a lot of times. So you have to have an assumption, and this is an entry technique that's not confirmed. It will be just a hint how to enter the market without the smart money element. It will expand dramatically the opportunities for capitalization. Again, you can enter the market here in combination with silver bullet. That's a working pattern too, but in combination with what you have already learned today. This is the silver bullet pattern. It will play an even more detailed, structured role. And the final point that I want to share with you in this video is a confirmed gap without any additional elements in smart money. What does a confirmed gap mean? You're already looking at some potential rebalancing zone. If you look at this gap, we have above 50%. It's exactly in the middle of 50%. But if the price goes higher, it's already kind of a good fit for us. And there are no other gaps. So you see a gap like this, and you don't know if the price will stop or if it will go there to take liquidity and so on and so forth. In this format, you need to wait for confirmation on this entry. What kind of confirmation? Usually this story should be some older time frame. There is H1, H4, maybe maximum M30, and you go over and you see. Yeah, okay, there's no gap at M30, but there's no gap on M30, but there is on H1. There's no gap here on M15. And you're looking at the price reaction. So you've marked the gap of this older time frame, and look what happens here. There's an order just in the moment candle, and it becomes an order block. It's validated. Even this minimum, it's already broken. You could have entered right here. But let's say you would hesitate, and you can't see much here on M15. We move to M5, and what we have here is downward movement, rollback, rollback. By the way, also in the gap on M5, here we have confirmation. Such a fractal overlap. Again, this candle right here on M5, this is also an order block. Well, it's a standard story with confirmation. We broke the structure, rolled back, broke it again. Here we could be doubtful, afraid. Okay? So it's kind of a risky entry. Yes, it will bring a lot of profit, but it's risky. And this is the story of a quality display. Liquidity has been removed. Well, this is where the liquidity was cut and gave a clear reaction to this gap. The price didn't go somewhere else. This gap is important. That's all. And at this moment, again, what are we paying attention to? Specifically in this unconfirmed format, the breakdown of the structure and the favorable rebalancing of the gap. Anything above 50% is allowed to go in. This is where you could have entered. Put a stop loss here, conservative here, and earn your profits. That's the final unproven entry technique. Guys, that's all I've given you. That's more than enough. For you to spend several hours on repeated viewings of this video and dozens of hours spent on research on your charts. This is very important if you want to get more information. It doesn't matter if it's through a course or personal information. Write to me in Telegram. I will tell you. I will give you tips. I will find the right option for you. And you will be able to integrate these things that I told you about here much faster. If you are looking for answers, I have those answers. Text me on my Telegram. I'll be happy to give you tips and help you with all of this. So I'm really glad that you watched this video to the end. I wish you the best of luck in mastering all this information that I showed you, and I'll see you in the next video.